Yo, what's good, y'all? It's Decrypt back with another video, and today I'm gonna be showing you guys how to use proper time frames. I get a lot of questions on what time frame should I be using, this and that, The real answer is there's no proper time frame, but it does depend on what you're doing. Are you day trading? Are you swing trading? Are you not trading? There's a few key components that you have to know with time frame. The first one being is that you can mark support, resistance, trend lines on any time frame. I don't really use trend lines. I don't know why I said it. Actually, scratch that. Never use trend lines. Okay, never use trend lines. They don't work. They're not real. You can draw a little line on your screen. It's not gonna work. Trust me. Banks are not looking at lines on screens and saying, "Hey, we're going up. Oh, we're going down." It doesn't work that way. Instead of marking trend lines, mark previous highs and lows, and if you break those previous highs and lows, that pretty much tells you what price action wants to do. If you break a previous high, price probably wants to push higher. If you break lows, it probably wants to continue lower. All right, common sense now. Come on, use your brain. But we're here to talk about time frames. One key component you got to know is the larger the time frame, the stronger that level is going to be. So just looking at this SPY chart here, I can already see one high there. I can see a high there. I see a high there. I see some highs over here. I see a high there. You can see that there's a strong level there, right? This is a daily time frame. So, it's going to take a lot more time to break this daily resistance here than it would, on a 5-minute, 1-minute chart. You can obviously see we had a bunch of consolidation here, just a bunch of sideways movement before price actually broke above all respected levels and wanted to continue higher. So if you're on a larger time frame, it's going to take a lot longer for that level to be broken and for it to be playing out, right? But say here, for example, this was last week. You have several highs here. This is the 3-minute chart. So this is a way smaller time frame compared to the day chart, right? So obviously you have highs there, highs here, there, and then finally price breaks this resistance point here and then retest and pushes higher, right? But it took less time. So if I go to like the 15-minute, say, it took less time. So this all happened within the same day, right? The other one on the daily chart took from, let's see, last September of 2022 all the way up until recently in June. It almost took an entire year to break this level and push higher, right? So it's going to take a lot longer for that level to break if you're on a larger time frame. So this is just a concept that you have to understand. The smaller the time frame, the weaker the level. Everything is the same, right? That daily level that I just showed you is the same as it would be on the 3-minute. It's just that these are weaker levels on smaller time frames, so it's going to take a less amount of time to break. It's as simple as that, right? So let me give you another concept, right? If we're on the 15-minute and we're looking for 15-minute demand, here we have a rally, a base, and then a rally, right? So we have demand there, right? We want to we want to mark the candle that started the move. A lot of people would say this candle here because this is a bottom green candle, but I would just say that's consolidation. If you move into smaller time frames, you're gonna just see 3 5-minute candles, 1-minute candles moving sideways until it finally breaks out previous highs. So I would say this candle here is the one that started that initial move. So I'm just gonna mark that demand candle there. Boom. Right? So if you mark it on the 15-minute, it might take a couple days for this demand zone to be hit. Obviously, you see that demand was creating on June 2nd and didn't hit until June 5th or June 6th, right? So it's going to take a little bit of time, even if you're on the 15-minute. This is why it takes a lot of patience, because you can see a setup, but your setup isn't going to hit for maybe another couple days, right? That being said, supply and demand can work on any time frame. Now let's look at Tesla on the 5-minute, right? This is on Friday, July 14th to which should be Monday this week, July 17th. But look, obviously you have a bunch of consolidation here. A lot of people would say, dang, look at this rally here, but where's the base? I would always start the candle that starts to move is the one that starts the initial breakout, the one that has the continuation going, like price is breaking out, boom, volume steps in and breaks these previous levels. Because you can see here, you weren't breaking previous highs. Obviously, the rally started down here, but Doesn't make sense because you're at lows, right? So this is the candle that started the move in my eyes, right? So seeing this intraday, I would have marked my demand there. You have your little rally, base rally. It's never gonna look pretty, you know what I mean? But this all happened in the same day, right? Because we're on a smaller time frame. So if you can recognize it on smaller time frames, it's more than likely to happen within the same day, right? If you're marking demand on the daily or the weekly, those could be used for swing trades, and they're going to take a lot longer to play out. So if you're playing options, you're going to have to buy a lot of time on your contracts. But if you're just day trading, stick to smaller time frames like the 3-minute, 5-minute, and then use 1-minute time frames to, you know, get a good entry or find a break of structure, you know, to get in. So like if I mark it on the 5-minute, I'm gonna use the 3-minute or the 1-minute to, you know, mark a break of structures because we're going up, and then we go back into a little downtrend, not a downtrend, but you know, we go down, we retrace, and then if you want a for sure entry, then you just wait for this little break of structure, break previous highs, and then boom, entry there, push. Obviously this continued lower, but you know, usually I get in right when it hits demand. So I would have been green on this trade, would have scaled out. Even if it broke even, I would have been like, okay, cool, whatever, got a green trade. When a lot of people would just buy randomly and then say, oh, it went down, it's because they don't understand. But it's cool. I ain't really worried about it. Actually, I am worried about it. If you don't know what you're doing, join Decrypt, please, because you're just wasting money, throwing money away. Don't be one of those that blow accounts and give up because trading isn't real, You can make a lot of fucking money doing this, I promise you. And so again, you know, and that's just supply and demand, right? Obviously, I'm only showing demand because we're in a bull market. You don't want to short this market. What are you doing shorting this market? Like, we haven't stopped going up since September, and you're still, bro, it hurts my head. But look, say you're marking, so right here on Apple, we have an outside power candle. You know, we have pretty much almost a bullish engulfing candle. If I'm marking the previous high on this candle, boom, on the 1 day, then I want to use smaller time frames like the 1 hour to see, okay, look, now we have this. If we break above that, I want to see something like this. You know, boom, we break previous highs. We want to push higher, target other highs like 195 up here. And that's all-time high on Apple, which is insane. It's crazy because, you know, we just got out of a bear market. But then you could even push into smaller time frames. Say we create demand there. We create a demand zone, you know, because you got to have demand, you got to have volume in order to break out. Say we create demand on the 15-minute time frame. Then I'll mark my demand candle and then wait on the retracement and then play that. Boom, now we're targeting previous highs. TP1 here, TP1 there. Like so, boom, TP1 there, TP1 there, or TP2, TP3, right? So this is how you want to use your time frames. You want to use larger time frames to mark those strong levels, and then you want to use smaller time frames for your entries, right? 1 hour, 4 hour, the same. So if say, you know, on the 4 hour, let's see what that looks like. Yeah. So it's pretty much the same thing. You're just marking previous highs on the 4 hour. And then once you break above those levels, then you want to, obviously price wants to push higher, target previous highs. Those are going to be magnets pretty much. And then boom, right? So it's super simple. It's nothing serious, I promise you. But this is how you use time frames. Just keep in mind that the higher the time frame, the stronger the level. But yeah, it's been Decrypt. I hope this video made a lot of sense to you guys. I know you guys have a bunch of questions, so keep dropping comments. If this helped you out, like the video, and then obviously subscribe. I'm going to be posting a bunch more recaps, this and that, everything, you know, whatever it is. Boom. But yeah, I'm out of here. You guys take care. Decrypt out.